The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Monday, the 16th of May. Took me a long time. I sent out these charts to subscribers over the weekend. I don't know how many charts, just charts and charts and charts. And in the beginning, I kept putting the 19th of May because I thought that was Monday for some reason. Then I had to correct it after that. So let's just run the numbers. This is a really important session after that sharp move down on Friday. I did have a Chapman wave trend gauge, and I can rest assured that others will start working on this trend gauge. I do not give out the exact numbers that I use, but I'm sure someone will start using it as a different way to Richard Arms, the way I've been using it. However, my indication said that within 2 days you should get probably an overnight futures rally that takes you 9 to 11 points up in the E-mini futures, which should help the cash indices. Wow, did we see that today? So we've been short. We're long and we're short. We got short indexes, we short stocks. They had a huge move down last week. Now what we're looking at is a bounce, an important bounce. Let me run the numbers. Dow's up 128 at 17,663. The S&P is up 15 at 2,061. The comp index is up 42 at 4760. Of course, it didn't hurt to have Buffett come out and say that to say that he's got, what is it, a million, added a million shares of Apple. Not bad. Apple, what's a billion bucks? We'll see what happens because, he can be very early sometimes, or he can just, timing can be perfect. I remember when he announced Union Pacific, that was almost a low, and it went up sharply from there. And other stocks continued down, like IBM, not only down, but continued down sharply. So when you have a couple of billion just lying around loosely, you can afford to take time. You don't have to rush. So we're looking at, and this is going to be very important. The futures right now show you 13.75. You see that arch formation? And you see the way we're mixing in the greens and the reds, the green up and the red down. We've had red and then a long-legged doji and then a strong red leg down on Friday. Went to a lower low today. Didn't take out the 2030.50, and that was important. 2030.50 low of the 6th of May. In the last move down, we went to a low of 20. Wait, something's wrong. 2035. I knew there was a round number. 2035 low this morning. There it is in the 120-minute chart. Now, this is what's really interesting. And I went through this with subscribers over the weekend. I'm going to show some charts in a moment. I did not get a sell signal in most of the indices over the weekend. I have a sell signal in the weekly chart of the Qs, the NASDAQ 100, but nothing else. Maybe the New York Stock Exchange, but the others have not done that. That's down the S&P, and that's really important. What we're looking at here is that look at that 9-period moving average at 2044. We went under it today. We went to 2035 on the E-mini futures, and now we're strongly above it. I've got sell modes in the dailies, but not a sell signal. That's very interesting in the weeklies, and I'll discuss that in a moment. We've got a nice leg B up in the 120-minute chart, and that's also suggesting I should have put this in. I didn't. I don't like to have too many lines. I'll do it now because it's becoming so important. We're up against a downtrend line in the 120-minute chart. Made a high of, we went to a low of 2035. We're 22 points high, 23 points higher. 2058.25 was the high. That's important. So this is a balance that we needed to see. Let me just move this away, and then I want to go to gold, and then a bunch of other things that we need to discuss this morning. All right, we've got gold up. Is that 4? Yeah, it's up 4. It was up much stronger earlier on at 12.76. Let me just do this, move this over here. I want to show you some interesting charts. Look at this, gold holding very nicely. Went above the 9-period moving average, held yet on Friday, going to the 9-period moving average and close above it. Had a big spike up this morning, and now we're pulling back. I still consider, I could be completely wrong, that we're in a digestive phase for gold. If you're looking at longer term, I suppose if you want to be buying some of the stocks, you can here. I think the best way of looking at it, give it a few days, because we want to see the relationship. Let me do this one at a time. Gold trading at 1275 at a high today of 1290. So that a 15-point decline is quite important, because that's a lot. That's a lot to pull back. Days young, we aren't even 2 hours into the opening session of the week. So let's just do it in relation to silver. Silver is up 0.08 at 1721. It looks to me like silver's really struggling here. Peak E in the daily, peak D in the Chapman wave in the weekly. Let me just do this for new listeners. In the Chapman wave, you look for the most identifiable low bar, and you merely count each successively higher peak. And you want to go, and I label them uppercase on the way up and lowercase on the way down. So it's uppercase A, B, C. Your objective is to always get to a D if you get a buy signal going to a buy mode. Lo and behold, we got to the D right there, going from the 1360s to the 1806 area last week, 2 weeks ago. Now we're having this digestive phase, and I'm going to draw this in. You'll see that we're in a rectangle consolidation phase, as far as I'm concerned, at this particular point. And you can see in the daily chart, look at this. You're going to be able to draw trend lines, just 2 trend lines, make a channel if they parallel. And lo and behold, we've got ourselves a trend line right there, trend line right there. Let me get them exact. That's declining sharply. This one hasn't declined sharply yet. So let's put it up there, and you'll see that they match. And that just defines really closely how the silver has 17.43 on the continuous contract as resistance, and it probably has 16.68 support on the downside. So now let's go to quickly high-grade copper. We've got high-grade copper trying to come off a low right now. It isn't acting all that well. You've got crude oil had a spectacular run over the last 3 days, and it's gone to the 47.50s. That was our target. Went to 47.85 in leg E to the upside over the 9-period moving average, 200-period moving average, and the 200-period simple moving average is testing the 200 EMA right now. And that's going to say that there's a real good chance that crude oil now whips around between, I say could perhaps touch 48, 48.20, but 48, the low 48s to the 45.70s, low 45s could be a trading range if the dollar. Now we're going to go to the dollar. Well, this is leg C up in the weekly, so it's still a very strong chart pattern. I would not be shorting crude oil. I probably wouldn't be shorting gold either. Now look at this. The dollar was a little, it was acting okay last night, then it pulled back, and now it's down 12 cents at 94.48. I just want to check. Now my updated dollar at 94.46. What do I have? 94.48. Okay, so we're in the ballpark here. It's acting quite well considering how gold has been acting. So I think that the gold is going to have this consolidation continue, and the dollar doesn't have to go all that much higher, but I think it's in a slightly higher to slightly higher highs and slightly higher lows phase right now. I'll be right back, and question, Basil, is crude going to make 50? I'll discuss it when I get back. Dow's up 121. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. So, a couple of things going on right now. I need to get rid of this chart over there. Whoops, I got rid of it. Let me slide it across here. Come back again to that one, and we're all set. Okay, so I needed just to show you something. A couple of questions here. Did I get this? Let me just double check because I wanted to see in the email if I got the question about specific in the oil sector. There Comcast started messing up again today. God, Comcast used to be absolutely fantastic. The last 4 months or 5 months, now I called them and they said, oh, they're upgrading. So there are little disturbances once in a while. But boy, they are irritating disturbances. So, yeah, okay, here's the question. I'll do this, BZN. I don't know if I've updated. Yeah, I have. BZN. BZN is Brent. Here we go. So, BZN 16 has made legs that, you remember I called that peak C1, C2 right over there in Brent? Well, here is your leg D. And that's going to be very important because it is a very powerful move. It's come off a major low at this particular point. You have to consider it a major low. And it's saying that in the weekly chart. Now, this is the fascination. Remember, Julie is the question. Yeah. So the question really pertains to where is it going? And even in the DEM, we've got a question here about. Let me just get this. I'm doing two things at once. So this is leg D in the weekly chart. I needed to know where we were in the weekly chart in the various contracts, and that's going to be very important. So what I'm looking at here is, here we go. The question was, Joe in Scotland wants to know, will we get to 50 in crude oil? So there are a couple of things that are going on right now. Are you seeing IMs? I am seeing. Let me just double check. Not seeing your chart. So let me just do this again. I had an incident earlier on. It was entirely my own doing. I've never hit that. In the den, there's a little X there. I can't remember what it's for. I just hit it by mistake. So I had to read it. Okay, yeah, the charts. We're back. Everybody's happy. We've got BZN, which is Brent crude, last day, July 2016. It's in leg D. It's above the 200-period exponential moving average. I'm going to go out on a limb here, and this limb might be very thin, but I'm going to go out on the limb anyway. And I'm going to suggest, based on the MACD and the stochastic, that crude oil has, for the first time in, I haven't got the continuous contract. Let me go now to, I wanted to say, yes, Brent has gone to leg D. It's at 49.04. Now I want to go to the crude oil contract itself, the continuous contract. And if I do that, what will happen is I can show you, I've already shown it last week, but I'm going to do it again. If you're looking at these letters, you see they kind of miss, they're below. That's because this contract gets smoothed out. So these are very close, they're right above. But from the previous contract, they slipped, all right? So they're the right letters, they're in the wrong place. That's all I wanted to say. Now look at this. Crude oil broke below the 200 period exponential moving average way back in way back in August of 2014. I remember mentioning this last week. Not once in all that period after that initial pullback and retesting the support, which then became resistance, did the crude oil even get close to the 200 period moving average. Until when? Until just recently, back in the beginning of May. It was a daily chart back about the 2nd or 3rd of May. It started to get close. And then what happened? For the first time, the technicals developed so strongly. And this is the way I like to use volume. I use unbalanced volume all the time. But volume itself, I like to see cluster formations. You see the way oil has been building up here. Look at the volume. And that's saying to me that there are buyers of crude oil, number one. Number two, it says at this particular point, the downside has tremendous support, and I'll give you the numbers right now based on the chart contract itself, between 44.50 and 43.30. Now, when I talk about that, I'm really talking about going into June, maybe even July. I don't know yet, but I'm just saying initially, I'm going to say going into June, two weeks' time, over 2 weeks' time. And then what we're looking at is the upside target area will be between 50 and 50. Let's call it 50 and 51. It's really 50.50s, but that would be my target on the upside before crude oil has a much deeper and longer decline. Okay, now I've got that aside. Within the context of chart formations, what we're looking at is a very large cup formation. Now, I do not like when the cup formation suddenly stalls and becomes a cup and ladle. A cup and handle like that did. So I'm going to be very generous to this, and I'm going to say that the bowl formation is still forming. And if I use just a very simple technique, and the technique says, go to the previous major peaks and draw a trend line to see where you can cut the line right there on the most hit. There, right from there. So it's from that bar right there, the bar of the 12th of January of this year, the high, going to the peak B high. This is peak A over here. The peak B minus because it restarted. The peak B high of 39.79 of the 28th. Then you went to a lower low, the lower low on the 11th. I've got the number of 31.02. That'll change when it gets smoothed out. But the low of the 11th of February goes peak A, B, C, D, E, and then an F. That F then becomes the target high right there at 43.84 on the 18th of March. And what does it do? It goes higher, and now I'm going to expand the chart so we can see this in absolute clarity. And as I expand the chart, you'll see that it was above that peak C of the 29th of April. You remember at the time I said, this is a good sign for crude oil because it looks as if we are getting closer to the 200 period moving average for the very first time. This is the closest we've been. That's number one. Number two is it did pull back, and then it made a peak D, and then it pulled back a day on Friday, and now it's making leg E to the upside. So as I'm putting the whole panoply of concepts together and analysis techniques, I'm saying the stochastics at 84, that's a positive. It isn't great. I'd love to see 90%, but hey, it's really good. The MACD is slowly expanding. It's got a little bit of a wedge there. You see the green line is above the red line. And that's a positive. You see this high volume bar right here that made the leg D breakout on the 11th? I like to look at those, and I don't do anything. I just look at them and I say, hey, look back and see what happens. Well, there was a high volume bar on the 8th, and that was a good sign. There was a high volume bar back on the 9th of March. That was a good sign. I'm looking out. But I only say to myself, I don't use Tom is the master of a technique that uses volume. I don't do that. I found for my own technical purposes in the Chapman wave, I love to use the on-balance volume. It has just been a true friend. It's gone to peak A, B, C, D, E. This is F. It could have recycled, but so far it's still acting very well. So that was crude oil. And the reason why I want to spend a little time on crude oil, because I think the whole idea of these commodities, the rotation concept, is something we've got to be aware of. I'll be right back straight after these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So far, just to give an assessment, I believe gold and silver are still consolidating. At this point, I don't see a massive move to the downside. I see time rather than price. Oh, in the end, it might turn out that it was quite a deep retracement. I'm not sure yet whether I want to be looking at the short side of gold, because my intermediate term is saying it's acting this well. Something's going on. Don't ignore it. Okay. So crude oil is a little different. There's a different complexity here, because crude oil is in a different, it's more a political vehicle at this particular point. Now, of course, the South African rand did get clobbered the last couple of days, so that also has a political connotation. What, the finance minister or something has been arrested? Yeah, it's one of those typical things. So here we go. RRC 39.40 down 2.63. Excuse me. Range resources made a peak G in the monthly chart, went all the way from the 90s down to the 20s, under 20 in fact, and the most recent rally has gone from under 20 to almost 45. It's trading right now at 39.43. Made a peak F high at 44.68 on the 29th. I think this is consolidating. I would not be surprised. So the question is RRC, Chapman Wave, and XNG. So looking at it, this is in leg C to the downside. I would not be surprised. A, B, C. This is going to be an A minus because it failed. I would not be surprised to see a test 38, break 38. 36.50 to 35.50 is really the testing area. And it's got a 200 period moving average support at 35.77. I would wait, have patience. Will there be a leg D? You know, everything about it says there should be a leg D. I've got an up arrow. So I'm just saying, let it take a little time, another week or so, the whole week, into early next week. If it suddenly trades at 42.50, says it's a high-level consolidation, maybe it'll make that leg D in the weekly. That'll renotate the that'll renotate the daily chart, because the daily chart is an F. There it is, an F/C. So it could still go to that D. But in the meantime, just treat it real simply. Say it's not acting well right now. Crude oil is up, and therefore this is not acting well. It should come down a little bit more. Let's see how it is. Give me an email when you see it trading below 36, and let's look at it again. And then I don't know what the I've forgotten. Is that natural gas? XNG. Okay, yeah, natural gas. I'd rather be looking at the NG contract that I use. Slightly different picture, and it's in a down move, and natural gas is acting very poorly right now. This could be quite a serious blow to the downside. At 2.03, down 0.05, it must hold between 1.996, the low of the 18th of April, and absolutely the low of the 28th of March at 1.961. That's far down, but you can see how quickly this thing moves, and it's got an inverse head and shoulders, so just be real careful. Now the upside is limited to 2.1 is going to be the big resistance. Okay, I hope that helps. Oh, I forgot about that. Let me just move this away. There we go. We've got, and then L sent me the email saying, what did L say? Yes, my 104.42 QQQ buy looks good. I never wanted to short. Why the Fed will not let the market go down until November 3rd? Is it the 3rd? I thought it was the next week. All right, well, whatever it is. So let's just have a look at the QQQs right now. I did give an analysis for subscribers to my opening call. Let me just show you something here. The QQQ is trading in a down channel made up, it's not an exact down channel, it's one that definitely the lows are important in this down, dash down trend line. And then the parallel line makes a channel. Channels are parallel lines. And so between 104.40 and 106.33, that's the range, but it keeps pulling down. So it's making lower lows and lower highs. My thinking here is that we could see the Qs, which is the NDX 100, trade in a trading band, and it's going to be really important that it holds 105.14 between now and Wednesday afternoon. I'm not sure what will take it down that sharply unless it's bad news. But the thing is, it's also got tremendous resistance at 106.90s, the 200 period exponential moving average, and then the downtrend line is going to be really important, coming in at about 106.90 to 107.20. So those are the parameters. In the meantime, the weekly chart is still saying, nothing here, folks, just move along. I don't think the Qs are going to go all that much higher without taking a little more time in this symmetric triangle that's forming here, and that has a narrower range of 104.90 support and way up there at 109. What is it? 109, between 109 and 110. I think that's going to change as well. So in the meantime, I'd use the daily numbers. I think those can be considered quite accurate. Now let's just have a look at something else. Basil, do you see X buyable here or more pullback coming? Good question, because over the weekend, I kept looking at these and I thought, I had that sell signal in the US Steel company. X is simple trading at 1466, up 68 cents, up 4.86%. But wait a minute, it just took a dive from 20.55 to the low Friday of 13.93.7. So that's a 60. How much is that? 20. What did I just say? 20 down to 13. That's 7 points. So that's a 1/3. It's a 30. It's over a 30% correction. Question is it buyable here? And I have to answer Jay in the den. No, I don't think so. It needs a little more time. I would give it more time. That's all. It will be, but I just think right now I'd be a little careful. Oh, you could trade for a bounce like it did today, but my thinking is that it's going to do a little bit of bumpy sideways moves. I want to see how it tests 14 one more time, and then I'll be able to make a better decision. But what WPC is WP carry. Oh, I looked at this a long time ago and I said, what a fantastic chart. What do they do? I can't remember what they do. Look at that. Walk in the 9-period exponential moving average, and then it went off my radar. And so now the monthly chart is starting to improve a lot. So that's a good sign. Oh, I have this notation. Let me do this quickly. That's the low. It's A, B, C, D, recycles. A, B, C, D, E, F. Made a peak F top, made a cup formation that failed. Another one. I think this is going to fail as well. And I think it's going to fail on this trend line right here. Look, make it easy, from the monthly chart high back in 2013. And I'm going to go to the lower low of these candles. Rather than the wick there, I use the whole body of that red candle and the wick of that lower candle, and I put it and I make it. I'm very comfortable that when it hits 3 out of the 4, exactly 1, 2, 3, 4 out of the 4. So that says carry could bounce a little further to 66, 60, 67, 30. That's 3.8. That's 5%. So let me just look at this a little closer. Oh, the weekly chart is good. A, B, C, still acting very well. Okay, now I can do it. I'm working backwards. So what would I do? I would do this. How did it act on Friday? Oh, A, B, C, D. Recycle. A, B, C, D. This could be A, B. I like it. I'm going to do this. Who asked me the question? Peek in the den. I'm going to suggest WP Carry Inc. trading at 64.15, up 81 cents. I tell you what, we've got the break coming here. Give me 1 second. I'll do during the break. I'm going to do. I'll put the notation. I had it once, but I'll do it again because I like the action. I love the fact that it held on the pullbacks. I think this is a tradable buy for 3 to 5%. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So if the rally that we're looking at now is going to continue for a little bit longer, there might not be all that much upside left or at this particular time, unless we've just started a whole brand new buy signal that's going to go to a buy mode. I don't know. I don't think so. But it seems to me that the pattern we're looking at says choppy, going to up towards the 20-period exponential moving average. I'll talk about that in a minute. Let me just finish this up. So WPC, I'm going to say right now at 64.18, your risk is 1.5. Why? Because if it takes out the low, not even that, if it takes out the low of 63, I take the low of Friday, 62.83, so it's a little, well, yeah, less than 1.5. Takes that out, you want to say to yourself, okay, hold off, don't do anything yet. Let's see how the 62 area holds. Maybe we'll buy it back again. But right now, I would start a position at this point at 64.18 with a 1.25-ish point stop. I think this is for a trade, but it will become a position play if, regardless of the market pulling back, this thing holds like it has over the last week. That's really the issue. So start off thinking cautiously. Look at your losses being potential 1.5 points, but your gain could be 66 will move to the upside, 1.5, then 2 points. But if it takes out this trend line at 67.50, in May, I think it's going to be tough to do, but I'm just saying it's showing a lot of strength. If it does take it out, your next target on the upside would be 73.88. That's huge. And I don't think you can do it all in one sweep or swoop, but it could take a couple of months and work its way there. So you've got yourself a beginning position. So now that's that, and I need to do a couple of things here before I move on. Quick question, and I think this is a very important question. EEM, what about the EEM? I looked at this over the weekend. I don't see a trade in the emerging markets. I just don't see it. And EWZ, that's Brazil, that's a little different. It made a peak F-top in the Chapman wave back on the right there, and just under 30 2 or so weeks ago, and now it's pulling back quite sharply. I've got this as a D in the weekly. I think this is almost looking like it needs a little bit of a consolidation. Give it time, but I don't ignore it. And I know they're going through terrible times, but the chart is saying that perhaps as oil is helping them, and that could be what we're looking at. So EWZ is the Brazil capped ETF. It's like trades like it was trading the Brazil market, although it's made up of other stocks. It might not look at all like the index itself, the Brazil index. So I'm just saying that I'm looking at it chart-wise. I'd be a little careful. I wouldn't do anything right now, but that's a little different to EEM, emerging markets. So this one might be a trade, but for me, I would just step aside for now. I want to see how it handles the 27s and the 28.32. Now I want to go to this. This is what I showed my subscribers every day. I'll go through what I show them every day. If I can just find the sequence, there were just so many charts. Here we go. So we want to go back one. I'm going to go back to there. Is that the one for, I called it the 19th? Yeah, I called this the 19th. Of course, it wasn't. It's for today, the 16th. So I write a whole thing about this. And I said that this is the pattern that we're looking at. And that there should now, from a trough D, there should be a bounce. Plus, I had that trend gauge flashing to say that there should be a very sharp move in the futures, probably overnight, either tonight or tomorrow night, last night or tonight. So that could help the market. Now the Dow's up 150. S&P's up 17, so there's a lot of buying. So now we've got this move that matches these candles moving under the 200 period moving average and then at the moving average. So where is it now? That moving average is at this particular point. Find the chart right there. We haven't yet gotten even to the 9-period exponential moving average. So there's a little bit of a way to go. Now the question was for subscribers. I asked the question, they didn't. Is this a time to be flipping from the short side to the long side? Well, we got in almost the exact top on our core position. I don't see any reason to change that. Probably I should have said, we've made a nice gain in the 3-to-1 on the short side. Let's take that profit. Maybe let's even switch to the long side. There was so much work to be done. I didn't bother to do that. Maybe we're giving up gains that we shouldn't have been giving up, but that's okay. We've got plenty of shorts, and I'm going to explain a couple of things. So I discussed this in great detail. Right. Yeah. Not right here, but right here. That's it. Okay. And then I have the overview that didn't necessarily go out in that sequence over the weekend. Here's the overview. I'll discuss what the Chapman wave trend gauge is flashing, the pattern that we're looking at, that arching formation in the daily Dow, the daily S&P. The 120 minutes had pulled back, and a leg C could make a trough C and bounce. And I give the parameters to look at. So support at 17,490s. I'm not sure where the low was today. Let's just see where the low was. Dow, the low today was 17,531. So it was 40 points off, but I give those parameters every day. And now let's go to overview. And then I discuss what we're looking at. And I discuss in the day why we should be looking at if the Dow is doing a certain number of points, why, if the VIX starts to drop, there could be further rallying. The VIX was higher, and now it's down 24 cents at 14.80. So that's also very important. Then I had a whole bunch of things. I had stuff that you won't find in most newsletters, any newsletter. This is London's tallest skyscraper. It's a beautiful building. And they have some really ugly buildings. This one looks real nice. So it is 309 meters tall, 44 elevators, includes double deckers in the elevators. 95% of the components inside the building are recycled. I think that's great. I'd forgotten this building was being erected and is now almost completed. I don't even know if it's opened yet, but maybe it's still being finished. London is beginning to look like a fairyland with oval, circle, and now the sea in the background. You can't see it on this chart, but it shows you that circle. So it shows you that that circular. What is it for the viewing? Like a roundabout. Well, no, not like a roundabout. Anyway, so they call this the Shard. It's called the Shard London's building. Look at this. Just about to take on the 29th of May. It has its inaugural trip. This is it's called Harmony from Carnival Cruise Lines. I talk about mega things. I talk about the major market top that's going to come based on the giga, actually, in most cases, phenomenon that's out there. In Dubai, they're building even a taller building than the Burj Khalifa. And it's going to be the world's tallest building. And they're vying, look, London's tallest building all over the world. And look at this boat. It has 6,500 passengers. This is like a city on wheels. On wheels. A city on the ocean. So it really is quite incredible. It has a park that has its own central park. It can take 1,600 people, the park alone. All right, that's what I showed. I showed charts of stocks that we have. I showed the QQQs, what we can expect if there could be a bounce towards that area right there where the downtrend is, and I just spoke about that. I talk about stocks that we have. I show every day. I show the E-minis and what we can expect, and I show the trend lines that are unfolding. So that's the E-mini right there. So the target would be the 2054 area. would be the 9-period exponential moving average strong daily resistance. We've actually gone above that. That's very important. So I wanted to give a kind of an overview of what I do in my newsletter. And as we're about to go off, I wanted to tell you that the Dow is now up 153, S&P's up 18. Good counter trend move. I'll be right back. We talk about the SMHs for S&P and the Dow.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, don't forget, you got your swimming lessons. So the XLU, what I just said to in the Dan was, yeah, it's just kind of stalled right here, but it's at 49.18. This is the S&P. You select utilities. If it breaks out and goes above that 50 to 51 all-time high, well, the all-time high is 49.78. So if it gets into the 50, 51 and just goes straight through it, that's going to be very bullish. But if it stalls here and suddenly takes out at 49.19 by Friday, if it's below 48.27, that's going to say, uh-oh, timeout, consolidation going on. That might be good for the market. We'll see. So I'm going to have to make a decision. Have we had enough decline based on the QQQs, et cetera, and is this a move that's going to actually not stall and come back to lower lows? Is it going to match what we've been looking at for my template? Those are the decisions I'll make for subscribers right now. We're looking at the SMHs. We don't have a position in SMHs. We had the SOX at one point, SOXS, the shorts, we didn't hold it in the 33s, and it screamed higher. Now, with the low that's just been made in the SMHs, that was on Thursday at 50.88 after hitting a high of 55.66. It's 5 points, 10% correction, 9% correction. There's a strong bounce. The SMHs in the semiconductor index up at 52.42, up 1.01. Very important. What's going on is that the weekly chart suggests, and the monthly says, there's longer in the timeout that needs to be done. And if that's the case, we will see a best side with that very ugly candle of the 29th opening at 53.61, pulling back to 52.13. So that little gap between 53.61 and 53.69 from the 28th, maybe, I'm not sure. At this point, I'd say that would be the upside. Strong resistance. If it actually gets to 54, I have to reconsider everything. But at this particular point, I think this is a very strong oversold bounce with about another point and a half maybe to go, and then we'll see what happens in the SMHs. Question about the IYT. Yep, we'll look at the IYT. Just a little bounce off the lows. This is the one that's saying to me, just be a little careful here. This market, based on the history of the transports acting weaker sooner than the Dow. Remember, Thursday will be an anniversary date for the Dow when it made its all-time high. And the transportation index goes all the way back to November of 2014. 6 months before it made its high. So we're going to be watching this closely, but there's nothing here to write home about. Okay, now I wanted to do this. I'm looking at my charts, and I just wanted to show you. So here's something that we've been short. Here's something we've been long. This is the telephone, AT&T, trading at 39.19 right now, 4 cents. We were in at about 34. And we took, we've got a dividend, and we've already taken off just a little over half. So that's what's left. And it made a peak D, a left side, right side price, time. Actually, let me show you the real chart right now. Not there, but there. Telephone. And you'll see, I just wanted to show you the type of thing that I do in my opening call for anyone who's interested in trying it out. This is a perfect time for it because this is a market that's giving us opportunities long and short. So what's happening here in telephone is that it's still having a high-level consolidation. It looks really good. And on the monthly, so far, I just have to call this a B. And all it needs is to get to 39.73. No big deal. 80 points, 60, 70 points from here, 0.60 from here, less than $1. And it breaks out in the monthly. I have to call that leg C, and that's going to be really positive. So those are things that we do. We got shorts, we got longs, we're all over the show, but they seem to be working, and that's good. Now, what I want you to do is this. Avgo, I don't know if I've got Avgo. I think I redid that. Yes, it made a peak D in the daily, and it's Broadcom Limited. They got taken over or something happened there. Made a high on the 13th. Yeah, nothing there, nothing to write home about just yet. Now, just real quickly, as we're about to go out, here you go for your swimming lesson. Watch the VIX. If the VIX holds under 15 all the way through the day, then the market can hold up very well. And we're going to have to reassess tomorrow to see, was this a turnaround or is this an oversold bounce? Have a great day. Check out my opening call. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.